Hello, I'm your host, Effie Pilarinu, and today I'm delighted and excited to introduce Hans Zahar, who is the Chief Technology and Innovation Officer at Nutun. And Hans joined last year and brings 2 decades, roughly, experience in financial services, telecommunications, retail, and insurance. And we all know that these are very much connected to financial services that don't have the strict boundaries anymore that they used to a few decades ago. You're also, Hans, first of all, let me welcome you before I continue talking about you.
No, thanks, Effie, and it's great to chat again.
Yeah, you were, before joining Nutun, you were with TransUnion Africa as the Chief Product Officer and really leading innovation in customer engagement and credit risk solutions. So you are, from what I understand, you are passionate and experienced in that area. And this is an area that we will talk about. And for those that don't know Nutun, Nutun is an African tech firm. Last year, you won the Africa Tech Award as the best technology company, and we'll be talking about your services. But I want to start setting the scene. We are more than a decade into fintech. Fintech has become more mature. We have hyperscalers, 100 million customers, a new bank in Brazil. We keep admiring them. Stripe is handling and processing trillions of dollars. What is not so much discussed is how challenging it's been for these digital natives to scale with the complexities that come up, especially around customer service. And I want to hear your opinion, and I think these are serious lessons, practical lessons for those fintechs that are emerging. They're in the earlier, not hyperscalers, but in growth or smaller, and are really focused on customer loyalty. I always think of the digital natives as those that created the experience economy, and therefore this is very, very important for them.
Yeah, no, I think that's 100% right, and thanks for the introduction. Probably how I would describe myself as a technologist. So I've, as you say, for the last 2 decades, I've looked at new technologies and how it can be, applied to different industries to create new business models. So when you think of fintechs, I mean, these are startups who've kind of used cloud and digital and the changing customer expectation to create a completely new business model around banking, right? So largely they've leapfrogged all the traditional pains of banking. They don't have all the legacy problems, and then they've catapulted themselves into acquiring a lot of customers. But I think, to your point, I think that the big banks are big for a reason. They spent a lot of time dealing with the edge cases and the exceptions, dealing with customers and all the problems that the customers might kind of experience at a service at scale. And then, to your point, I think when the fintechs reach some sort of set of scale, they now also experience the same problems that the big banks are. Customers want different things and experience different challenges. And while you're born digital, digital is great for the general use case, but it's those little sort of customer friction points that I think the fintechs start to struggle with when they get a large customer base.
Yeah, and they also struggle with customer loyalty. We all know that it might be even an irony that overall, when we look at how fintechs have given more access and more choice to customers, that has definitely changed the dynamics around customer loyalty.
Yeah, I guess, the whole frictionless onboarding experience in the digital world, easy come, easy go. If I could get onto your platform quite easily, I can get off your platform and to somebody else's just as easily. So retentions become super important, and really kind of drilling into the reason for why customers want to leave in the first place, because the expectation is in the new world is I can change services. I can change services for a few extra dollars or pounds of service, or if I'm unhappy, or if my friend says this other bank is better, I'll leave. So how do you kind of, address those points and kind of retain your customers?
So fintechs have definitely offered more credit and more product, whether it's the buy now, pay later or other types of products. And therefore, collections has become an even bigger issue because of fintechs. And it is a very sensitive area because most customers that are in a position where they're delinquent, where there's a collections issue, they're vulnerable. So with the experience economy, how can fintechs really create an empathetic and effective collection strategy that aligns with what they're doing?
Yeah, I think the real value for me for fintechs is financial inclusion. So when you look at sort of marginal customers further down the stack and their ability to access credit to buy houses, own a car, credit, really drives economic growth. So I think, the fintechs playing that role of having a lower cost to serve model, as well as alternative data scoring, etc., to be able to grant credit to those consumers is a great thing. But to your point, I think, as an entry into the credit market, you also typically have less experienced customers from a credit perspective. They don't really know how to pay their bills. They've perhaps never had a credit product before that. And when you're kind of looking at in that world, empathy is absolutely massive. Is in a collections scenario, you're now engaging customers who don't necessarily understand the implications of defaulting on credit, who kind of not really familiar with the credit life cycles. And there's a huge part of the education, much the same way of the education that was required to get them onto the customers in the first place. It's that education of kind of keeping them up to speed with their obligations. So in a lot of ways, you're training, you're helping customers to learn of what it means. And, I guess collections has a bit of a stigma around it, thinking of people in dark alleys with sort of aggressive personalities. But largely what collections is rehabilitating customers back into the credit life cycle so that they can continue on that path. And empathy plays a massive role there, Effie.
So this has become a bigger issue because, especially in the US, I've been reading some statistics that actually fintechs, yes, they've extended credit to those that didn't have credit or were underserved, but they did it by going to lower credit groups. And I guess this increases the need to do this training and rehabilitation that you've talked about. Have you seen that the fintechs have understood that it's part of their role, it should be part of their service? Or is this something that you're seeing that the market really hasn't understood?
So I think it's probably the latter. From my time in TransUnion, where we were offering credit acquisition products, but also collections products, the bias has absolutely been on acquiring new customers and granting credits. But the balance has always got to be that when you issue a new credit product to market, which is probably fundamentally different to other credit products that you've done before, thinking lower balances, higher volumes, the traditional credit collections models aren't viable nor empathetic necessarily at that scale. So it's easy to kind of fall into the trap of acquiring customers, the next 100 million, 200 million. We all know those stories of the neobank, the digital bank is measured by how many customers it acquires, but you need to back that up on the other end of the collection cycle, because you can't launch new products if you don't know you can collect on them in an effective way. So I think the bias has been on the acquisition side, but we are seeing a shift. So more and more fintechs are now sort of engaging us and other players in the space to say, well, how do I solve this problem? You know, my delinquencies, maybe they're not coming through just yet, but the scoring tells me there's something coming. And how do I start gearing up my collection cycles for that so that I can offer more credit again and start growing the customers and the balances on the other side? So there's a definite shift, I think, happening in the market.
We have to talk about the AI now, Hans, right? We can't avoid, that conversation because it's everywhere, obviously, in the customer-facing functions of any financial services provider. So let's talk about first how Nutun's BPO services, how are they transforming? And in general, what are you seeing in the market? How is AI transforming the traditional BPO model that has been used mainly for cost efficiency reasons? You tell us whether it's also for quality reasons. How have you seen already the transformation? And then maybe we can look at future.
Yeah. So I think 2024, I describe it as the year of uncertainty around AI. So we had all the various GPT models, large language models coming into market, and the potential seems and is amazing. And I think everyone has been super excited about what it might be. But I would say perhaps in the 2024 period, people were struggling with how to adopt it. What's the use case? Where do I apply it? Does it make sense? What are the regulations around these things? But I think as the year progressed, and the same for us, we started to land on specific use cases where the AI made sense and where we could start POCing. And if I kind of look at it, the development of AI agents, where I think a lot of the energy is being spent, it didn't take terribly long. And I think for us, we had credible AI bots, with the ability to interact customers in a way that we felt and that was logical, and that you could intervene and see what was happening. And we've started to trial it in the market. And there are some early lessons that I guess we're learning. The first one, Effie, is it's largely in the collection space. It is about the economics. So if you look at any collections book, it's a super sophisticated, sort of scenario where you look at all your accounts and you decide which accounts have the ability to pay, have the propensity to pay, and are worth engaging to recover and get them back onto their financial obligations. And I think AI plays a couple of roles there, where given the cost of AI agents, you can now go quite a lot deeper into that book and still engage people in an empathetic way, in a compliant way, at a very different price point. And what you can also do is start segmenting what, in a hybrid workforce of humans and AI, which kind of cases go to which cohort of operators. The other problem that it solves quite nicely is the peaks and the troughs. I need 1,000 people to collect at peak, but only because that's when people answer the phone or are willing to engage those time of days. But I don't need that many at the low periods. So how does AI play a particular role there? So I think these kind of use cases are starting to show real promise, but it's very much as a hybrid with the human agents to largely deal with the economics of the situation, but also to kind of maintain the empathy as well.
And what I'm hearing from you is optimization of the human agents that are dealing with this, and some combination of better predictive analytics that are creating this pipeline and segmenting better the cohorts. Again, this is in preparation for the human agents and managing resources better, both technical resources and human resources. It's a
Yeah.
combination of those, right?
Yeah, and I think you spoke about sort of propensity and predictive models,
Yeah.
because I think we're also starting to see that channel of choice and the way customers are willing to engage is actually been super interesting in that it's changing, in that we're listening to the calls and it's not an exact science, but you're starting to see that some cohorts of customers feel more comfortable engaging with a bot than they do with a human, which has actually been super interesting. It's almost less threatening. I'm not wasting anyone's time. I can ask the bot questions. I can probe a bit. And if the bot is responsive and providing the training and the information to the end customer, there's a sense of enjoyment, and the sentiment of the conversation is quite good, but only on specific cohorts. There are other cohorts where the call gets cut, put me through to a human. I don't want to talk to a machine. And you're starting to also start seeing predictive models of which customers are willing to engage in a very sensitive time in their lives with a human versus a machine, or voice versus text. Which one is less threatening? Which one is the greater outcome? So I think there's a lot that we're still going to figure out in the space, but I think you hit the nail on the head. It's optimization. So having a great customer experience, but making the economics really work as well.
And I imagine that this is also applicable to the processes around fraud detection. And when you contact the customer in a case of fraud detection, it's a similar experience or similar optimizations that can happen by leveraging these technologies.
Yeah, I mean, 100%. A large proportion of bad debts in financial services is actually fraud. So I think I'm collecting from the right person. They got through all my onboarding, but at the end of the day, it's fraud, and you're contacting the customer. It's a real human, and you're dealing with this case where the human says, "Well, I never opened that account." And you're also starting to see AI coming further upstream. So if you're just looking for fraud, if you kind of flagging fraudulent transactions, fraudulent account opening, and the volume growth there, you're starting to see a particular use case for AI to say, well, let's not just worry about pure collection, but let's talk to upstream causes of bad debts, which is actually on the fraud side. So 100% right. I think it's definitely an emerging case.
I mean, South Africa is really an emerging place for these BPO services because of cultural and language affinity in the English-speaking world, especially when we're talking about the developed markets, America and in general, Europe. Tell us a little bit about your competition, India and the Philippines, and what you're seeing there too in terms of maybe their adoption, transformation with AI, their focus or not on these empathy at scale issues that our sector is now clearly confronted with.
Yeah, so I think, if you're looking at a global network of outsourcing, probably the first thing I would say is you're spoiled for choice in terms of amazing outsourcing destinations. India's got an absolutely massive scale with technology infrastructure, which is obviously world class. The Philippines, but I think probably what you're starting to feel is, South Africa is probably one of the best kept secrets for BPO that everyone keeps talking about, in that, when people visit, they're actually quite surprised in terms of the reality versus the perception they may have had from not being here. And I think you kind of have to visit to understand it. But, South Africa absolutely has a world-class infrastructure from a global connectivity perspective, internal infrastructure, roads, hospitals, cities, we absolutely well developed in that regard. And from a BPO perspective, it's been an industry that's been growing quite significantly over the last couple of years. And as you say, it's largely around the people in South Africa. Neutral accents, English speaking, very proficient in English. But it's quite a unique situation where South Africa has its economic challenges, first world infrastructure. So you find young people who've grown up in a digitally native world. They've got a cell phone, they've got internet banking, they're digitally savvy, but they also, unemployment is high and they're really looking to make a career, and they're finding that opportunity within the BPO sector. So you have these almost naturally resilient problem-solving individuals connected to robust infrastructure and available to the rest of the world. So it really is becoming a positive kind of story around the combination of those things. And then when you throw technology in the mix, in that, we've got some really innovative technologists, a lot of entrepreneurs. You just have to look at some of the richest people in the world. They're South African by nature, by birth. So it's an entrepreneurial culture, entrepreneurial both from a BPO problem-solving ability to deal with the customer's issues, but also from a technology solution perspective. So I think the news is getting out. More and more people are coming to South Africa, and for me as a South African, it's exciting to see.
Interesting, because, as you say, we are in a phase, or I don't know if it's a decade, whatever, we're in an era where we're all focused on these technologies, but the more we're focused on these technologies, the more we start focusing on the human and the cultural aspect. One thing that I actually heard and was a highlight for me in discussions up in Davos last week during the WEF, and it was actually in the Web3 hub, where there was the discussion about which jurisdiction will become dominant, in the digital asset space and so on. And what came out of that is that it will be some a jurisdiction that is an important financial hub, but also an important cultural hub. So we see this combination, and we talk about, humanity and AI, and it's such a major theme that wasn't around, just a couple of years ago. Maybe even during COVID, we weren't discussing this, right?
Yeah.
And now it's top of mind.
Yeah. I mean, it's a fascinating phenomenon because, if you look at the digital age, it was all designed to normalize every customer to the same pattern. So we have one platform, we deal with things one way, and that cultural differentiation, humanity element somewhat got lost in that equation. So you're absolutely, the digital entrants are now crowded with competition, all doing the same thing. And to your point, it's a large about the cultural affinity, do I have a connection to this brand? Do I believe what this brand stands for? Is there a higher purpose that's sitting behind the brand? Because I've got my choice and I can move around. I can go wherever I want, but where do I feel most connected? So yeah, you're 100% right.
And at the end of the day, we don't want to commoditize customer services. We don't want to commoditize the human interaction. And it's especially important in the cases that we spoke about: collections, fraud, any case that, is, I wouldn't say out of the normal, because it isn't, but it's not just the smooth sailing of swiping and buying a product, or the completing, processing a transaction. It's about, the issues that arise in financial services, which at the end of the day are serving a goal, and there's friction that comes out in that process, and how we deal with friction.
Yeah. And if you kind of think of that friction, I mean, the fintech world and the digital guys, they've removed so much friction. The service is absolutely incredible. Tap, swipe, go on your phone, buy a service instantaneously. It's delivered to your door the same day. you're surprised to see it, that you've created this massive expectation that when it goes wrong, I'm expecting the same level of efficiency. And to your point, then I pick up the phone and call a call center, and just the differential in that experience can be stark. Back to your point, that's the difference between keeping or losing a customer.
Yeah, and let's not forget that we can't compare ourselves to the big tech. Amazon has no call center. You and I can't call and complain about something that went wrong in the delivery of a package, but that's not possible in financial services, whether it's delivered directly by the regulated or authorized provider, or it is embedded in a commerce site or some other travel site, or a non-financial services business.
Yeah. No, I mean, it's interesting that you say that, because financial services have to be ubiquitous, even for the digitally illiterate. I can only shop on Amazon if I'm digitally literate and consume the service, but it's not true of financial services. I can consume the service without that. So I have to cater for all cohorts.
Yes. And it's only now that financial services providers are realizing that, and growing also accessibility for people that have different accessibility issues, blind people or other people with disabilities, and access there is also important. So we have to close our discussion, Hans. And in the closing, I want to stress how important were the points that you shared, not only for the hyperscalers, but those that are, regional or local, because really they can take a lot of these insights and improve their customer service in a way that maybe they hadn't thought before, but introducing empathy, not at scale, but really in depth and very customized and personalized. Anything you want to add from our very interesting discussion?
No, only I would add is 2025, I think, we always talk about the most exciting year on record. I fully believe 2025 is going to offer massive opportunities for customer service, AI and other tools coming in. So I think it's going to be an exciting journey. And thanks for having me, Effie.
Thanks, Hans.